Okay, let's look at the damage. We just put the final touches on our new report, Constellation Energy, the nuclear monopoly and the AI power trade. And wow, it feels a bit like we're handing people a life raft in a hurricane. If you've checked the ticker, Constellation is down nearly 30%. The sentiment isn't just bad, it's non-existent.
It is a bloodbath out there.
Yeah.
But that's exactly why we had to do this research now. The whole mission here was to answer one single binary question. Is Constellation a value trap that's about to be crushed by regulators, or is this a compounder that the market has mistakenly put on the clearance rack?
And we think we have the answer. Our one-line thesis is that the market is, panicking about politics while completely missing a fundamental shift in how power is actually sold.
Exactly. The demand for 247 carbon-free power from hyperscalers, we're talking the AI giants, is decoupling from the public grid.
It's becoming its own thing entirely.
That's the big picture.
Oh.
But you can't blame investors for being terrified right now. We identified a massive why now catalyst. On January 15th, the Trump administration and
PJM being the grid operator for the entire eastern U.S.
Right, they released this statement of principles.
And the market treated that document like a declaration of war on these power producers.
That it sort of was. It attacked the core revenue model. The government essentially threatened to cap capacity payments to existing power plants, all to protect ratepayers. In a report, we call this the regulatory kill switch.
Okay, so for anyone who doesn't, spend their lives staring at utility bills, break that down for us. Why does capping these payments just destroy the whole thesis?
Well, think of it like Uber surge pricing. Independent power plants, they often run on really thin margins most of the time. They're waiting for those moments of extreme scarcity, a heat wave, a cold snap.
Right, when demand spikes.
And they can charge a huge premium. That surge is where all the profit is. So if the government steps in and says, no more surge pricing, the economics just collapse.
Which is bad enough. But we have to talk about the self-inflicted wound. A week before the government threatens to kill their revenue, Constellation closes the Calpine acquisition, a $26.6 billion deal.
The timing was, let's say, unfortunate.
Unfortunate. From the outside, it looks reckless. We're looking at $12.7 billion in new debt right when the regulatory environment turned hostile. I mean, aren't investors right to worry that the company just leveraged itself into a corner?
On the surface, yes, absolutely. The debt is real, the dilution hurts. But when we dug into the asset maps, we found something that, well, it changes the entire calculus. We're calling it the reliability mode. You have to look at the physics of what they actually bought.
So explain that. Why spend billions on Calpine's gas plants? If the future is green energy, why not just build massive battery arrays to store wind and solar power?
Because batteries just can't bridge that gap yet, not even close. AI data centers need 99.99% uptime.
The famous 5 nines.
Exactly. And wind and solar, they only generate power about 25 to 35% of the time.
Yeah.
You cannot run a hyperscaler on that. You need what's called firm power. Constellation already had the biggest nuclear fleet, running at 94% capacity. By adding Calpine's gas fleet, they didn't just buy dirty assets, they created the only fleet that can guarantee power 24/7, 365.
So they own reliability? Okay. But again, I keep coming back to the government. If the Trump administration caps the price you can charge for that power, does it even matter how reliable it is?
That is the multi-billion-dollar question. And this is where our research uncovered their exit strategy, so to speak. We looked very closely at the Microsoft deal to restart the Crane Clean Energy Center, what people used to know as 3 Mile Island Unit 1.
This is the definitive pricing evidence we were looking for?
We ran the numbers. Right now, the wholesale market, the public price, is trading around, say, $40 or $50 per megawatt hour. But based on our analysis, Microsoft is likely paying over $100 per megawatt hour.
You're paying double.
A 100% premium. And this proves that the hyperscalers are willing to completely bypass the regulated grid. They're not buying commodity electrons anymore. They're buying an insurance policy against the public grid failing.
The private grid is emerging.
That's it. So even if regulators crush the public price, the AI companies are just negotiating private deals that leave the regulators out of the loop.
Plus, there's that backstop.
Yes. We also modeled the impact of the Inflation Reduction Act. The production tax credits, they act as a kind of revenue put option. So even if power prices somehow go to zero, Constellation has a guaranteed floor for their earnings.
A floor on the downside and basically unlimited upside with AI. So putting it all together, where did we land on the final verdict?
We rated it a high conviction buy. It's classic arbitrage opportunity, really. You can buy the stock today at a depressed public utility price because of all this political panic, while the company is already pivoting to sell its power at private AI valuations.
A compounder on sale. But before we wrap up, I want to touch on that final point in our conclusion. We estimated the replacement value of these assets at over $200 billion. If the private market values reliability that highly, what happens to everyone else?
That's the thought that keeps me up at night. We might be witnessing the permanent bifurcation of the energy grid. On one side, you have the haves, the AI giants, building a private gold-plated grid with nuclear and gas. And on the other, you have the have-nots, that's us, the public ratepayers, left on a constrained, regulated grid that just can't keep up.
And Constellation is sitting there as the poll booth between those two worlds. Heavy stuff to consider. That's it for this deep dive into our latest research. We'll see you on the next one.